Well, good evening, everybody. My name is Janice Strutt. I'm the co-founder and executive director of Morgan's Caring Connection. We offer resources to families with professionals and through a vetted network of professionals. And then we do our webinars statewide. And then last but not least, we fundraise to pay the legal fees for families to do their estate planning. So that way there is a plan in place. We support people whether they need the funding or not. And we're always looking for new topics where families are struggling to get the answers that they need. And we are always looking to cover those in our webinars. That's what brings us to tonight for C4 Insurance with Jason Stendalen. And he's going to talk about durable medical equipment and how to properly insure it, because that's something as parents, I think we forget about, and life insurance and the importance of it, why we need it. And then he'll touch on the other forms of insurance like auto and home and, the importance of how to do things the right way so that in the event that you need to take advantage of having your insurance coverage, that what you have in place is what you need. So without further ado, I just want to let everybody know that we do record these sessions. Everybody is anonymous except for me and Jason. And once it's over, I will send a link out to everybody as well as a survey so that we can get more information from families to make sure that we're giving you, again, the right information that you need and from an education standpoint. So I will go ahead and let Jason get started. At the end, we'll offer opportunity to ask questions and kind of go from there. So go ahead, Jason. We'll let you take it over.
Awesome. Thanks, Janice. Excited to be here, and thanks for inviting me to present. So what is C4 Insurance, or why us? I spent many years working for other agencies. I started with Farmers Insurance and then worked with some other independent agencies around the Madison area, and just really was not impressed with the way they handled clients, and their focus was just to kind of churn out as many policies as possible, paying really very little attention to educating clients or really helping people understand policies. So I said that I wanted to change the industry. C4 is an explosive, so I couldn't really tell people that I wanted to change things in that way. So I had to come up with a different meaning. And so C4 stands for Caring Competitive Complete Coverage. Like I said, we are an independent agency that represents many different carriers. So what we do is we gather our clients' information, ask a lot of questions, make sure that we're addressing their needs, and then we shop around to find that we're getting the best coverage and best price with current market rates, right? So I've been in the insurance industry since 2004, so a little over 20 years. I obtained my certified insurance counselor designation in 2015. And like I said, our focus is education. So we do ask a lot of questions. We go back and forth with our clients, making sure that their concerns are being addressed, and that, basically there shouldn't be many surprises later on down the road. We like to address their questions, make sure they understand things before there's any problems. So that's really kind of our focus. I want to start with the home insurance because this kind of factors into the durable medical equipment and just kind of those sorts of things. So there's four basic areas of coverage underneath a homeowner's insurance. You have your dwelling coverage, which is specifically the structure, and then other structures, which usually isn't as important, but that's usually often included as just a flat percentage of the dwelling amount coverage. Some carriers will be 10%, some are 20%. And that's for stuff that would be on your property that's not attached to the home. Personal property coverage, this is where a lot of your durable medical equipment may be covered if it's not attached to the home. So basically the way they define personal property coverage is if you could pick your home up and shake it, or whatever would fall out of the home is considered personal property. So basically anything that's not bolted down is going to be considered personal property. And then you have your liability coverage in case something were to happen, neighbor slips and falls, or someone gets hurt on your property, or you're sued personally, right? And so We're going to touch on mainly the dwelling coverage and the personal property coverage for this presentation. I think that's most important and where people will have most of their questions. So we'll focus on that. When it comes to home insurance, what you need to realize is that insurance carriers don't care about what the market value is or the appraised value or your assessed value. They're not looking at that when it comes to insuring a home. And so what we need to look at is, what are the basic amenities, size, square footage, style of home. And then we basically plug that into a construction calculator. And why that's relevant to you guys and the people on this call is if you've got built-in chair lifts, you've got track systems, you've got stair lifts, you've got stuff that's bolted in to your home, right? ADA accessible, different sinks maybe are going to be more expensive, bathrooms, that kind of stuff. You need to have that conversation with your agent and explain to him that you've got things that are of higher value that's going to increase the value of your home, right? And make sure that if there is a loss at that property, that they're going to be able to pay for or replace like property for like property, right? We don't want to leave things out, right? So make sure that if you have those kind of built-ins, that's a discussion that you're having with your agent. I don't care who you're working with, but that's very important for them to understand. These days, right now, we're seeing just a lot of changes where carriers are getting more and more particular and more restrictive on what they will and won't accept for new business. So especially age of roof is getting super important. Some carriers won't insure a roof that's more than 10 years old. Some won't go more than 15. And then we have some that will go still replacement costs on roofing up to 20 years old. But once you start getting a roof that's more than 20 years old, that can definitely affect your insurance premiums. We're seeing higher wind and hail deductibles, and then depreciated settlement on roofings, right? On roofing. So again, your amenities need to be discussed and what's built into the home so that your agent can specifically figure out what added cost that's going to add to replacement value of your home. Other things that can affect just insurance premium when it relates to the home is your location in relation to a fire department or a fire hydrant. If you're out in the country and further away from things, it's obviously going to take longer for the fire department to get out there. And are they going to have enough water? Those losses tend to be a little bit more severe. So insurance carriers charge a little bit more when you're further from town. Client specifics, age, marital status. Pretty much every carrier bases on credit. I know some people think that's not fair. It's not a full credit. They don't do a hard credit pull, but they do pull some basic information, and that will affect your rates. Multi-policy discounts. I'm always recommending that people try to use the same carrier for a home and auto, umbrella if they have that, so that make sure that they're maximizing discounts. Pets can get pretty, I guess, dicey. Pretty much every carrier, other than one that I know of, have a restricted dogs list. If you have a dog on one of those lists, they basically will not write the policy, and so that can change things a little bit. If you have a home-based business, that can affect things. And then claims history. Right now, carriers are really watching claims, and with the storms that we've had recently, especially in the Madison area, that can be, I guess, dangerous too. If you have more than 2 claims in the last 5 years, it's pretty hard to move right now. So carriers are just watching that as well. Coverage specifics, watch your deductibles. Again, this is going to apply at the time of a covered loss. If you've got durable medical equipment that your carrier considers personal property, you're going to be subject to whatever your homeowner's deductible is. I guess the big point that I need to make when it comes to durable medical equipment, especially if it's not bolted down, is you need to talk to your carrier. You need to talk to your agent and find out how that carrier addresses durable medical equipment. Some of them we represent almost 15 different carriers in our agency, and all of them, they're just different all over the board. So I can't give you like, hey, this is what you need to do. You just really need to know how your carrier is going to handle that. But if they don't allow you to schedule the medical equipment, which means that you would set it aside, like maybe it's a CPAP machine or whatever it is, or a wheelchair If you can't schedule that and put a separate deductible on that piece of equipment, you're going to pay the homeowner's deductible, right, for personal property, which sometimes that can be in the thousands, right? So you really need to watch for that. Liability limits, I think it's important always to make sure that you have sufficient liability limits. We all work very hard to build our estates and accumulate assets, and heaven forbid we get into some sort of lawsuit. We don't want to waste all that or have that all wiped out. Scheduled property, again, this is just going back to what I was just saying. Everyone handles them differently, especially if it's on premise or off premise. Most carriers are going to offer some sort of limit of that personal property limit on your policy. Most of them are going to be 10 to 20% for property off premise, right? Whether that's in a storage unit or while you're temporarily traveling or whatever it is. But again, you need to understand how your carrier responds to that specific equipment or personal property off premise, right? So there's no set rule for this. It's a conversation you need to have with your agent. Guaranteed replacement cost. This is a newer coverage that is offered on homeowners insurance. And basically most policies, when we were talking about coverage A or the dwelling coverage, basically most carriers will only pay a certain amount, right? If let's just say it's 100,000 of coverage, which is very low in our parts, right? But it's just an easy number to work with. Most carriers are only going to pay up to 20% additional above that in order to replace a property, right? So if we had 100,000 in coverage, they would only pay 120,000 at max to rebuild. And if there's anything over that, it's out of your pocket, right? Or that's your expense. Some carriers offer 125%, which is nice. It's an extra 5%, but not a ton, right? And then there's guaranteed replacement costs, which basically says if we as an agent do our due diligence and run the replacement cost estimate and we insure it for what the carrier says we should, then guaranteed replacement cost is no cap, even if it costs twice what we had it the pilot or the home insured for, they would pay that. So that's a huge advantage. We only have 2 carriers that offer that currently, but that's a huge advantage when it comes to homeowners insurance. Other endorsements, I mean, there's always things to watch out for. Be sure that you're asking questions. Make sure that you're talking to your agents about, siding and roof restoration, service line coverage, the guaranteed replacement cost. Do you need identity theft? That kind of stuff. The other big thing that's becoming more and more prevalent these days is cyber protection. People will say stuff online and people, get offended. They sue you. So the cyber is getting more and more popular, especially with the kids on all the different social media platforms. Things that can help lower costs. We kind of talked about a couple of these. Multi-policy discounts, obviously grouping things, a 4-year degree, or if you're part of a special price group, a lot of times there's medical, teacher, certain occupations will have different discounts. Good claims history if you have good credit. Longevity with a carrier. Carriers don't like to see you hopping every year. I would say you should not be moving ever more frequently than every 3 years, but sometimes there's circumstances where you need to. So try not to move super often, but it's always good to make sure you're not overpaying. Previous carrier, not to pick on anyone, but Progressive is kind of the one that a lot of carriers don't like. So a lot of times if you've been with Progressive, some of the carriers will penalize you for being with them. If you have a monitored security system, that can help, or water leak detection. There are some systems out there. There's one called Flow from Moen. It goes on your water main and basically monitors your normal water usage. And if it senses something out of the norm, it automatically shuts the water main off. So that can help minimize water claims. Things to pay attention to with auto insurance, and honestly, I think most agents do a terrible job educating people about auto insurance. And I think if we're realistic, if we're going to get into a major liability situation or a major claim, it's more than likely going to happen with our auto or with our car. Current liability limits, make sure you understand those, how state law may affect how you look at those limits. We'll get into the state laws here in just a little bit. What are your deductibles and how do they change premium? Some carriers kind of have these sweet spots, where, maybe 500 or maybe $1,000 deductible, is kind of their sweet spot for pricing, but just make sure you're weighing out the return on your investment, right? If you're taking on a super high deductible, you better make sure that you're being compensated properly on the premium side. Roadside and rental reimbursement, I think that's especially important, especially if you need a vehicle that's maybe handicap accessible. Carriers are going to handle that differently. Some, like as long as we include a certain class of vehicle, they'll automatically include a rental vehicle that's handicap accessible. Some you actually have to build in enough limit for that. So again, it's something to discuss. With your agent to make sure you understand how that's going to respond. Keep in mind that rental coverage is only going to be triggered by a covered loss on your vehicle. So it would have to be, a tree falls on it, you hit a deer and it's being repaired, or you're in a vehicle accident and now it's out of commission. So it has to be triggered by a covered loss under your policy in order for them to cover a rental. Do you need to add value for the vehicle for special equipment? Again, this is carrier specific. We have one carrier that it doesn't matter if we put the VIN number in and the vehicle is handicap accessible, which can be extremely expensive to have a vehicle built out. They automatically just cover that difference. With some carriers, we actually have to go in and add the added value of the special equipment, and that's going to increase the cost of the insurance. But again, if the vehicle is damaged or totaled out, you're going to probably want to replace that vehicle with something similar. So you got to make sure that you have the right coverage on there. Again, there's no standard across the industry, so you need to make sure you're having that discussion with your agent. Make sure you're bundling, like we talked about a couple times, bundle the home or renters coverage with your auto insurance. If you're a renter and you don't have renter's insurance, keep in mind that your landlord's policy covers nothing for you, right? So all of your expenses of moving or any of your contents, none of that's covered. A lot of times renter's insurance, if you bundle that with auto, you'll get it for free or just a couple of bucks a month. It's very inexpensive. An umbrella policy, we recommend that for pretty much every one of our clients, and that's basically an extension of liability insurance, which goes above your home and auto policies, so that in the event that you are sued or get into an accident and we exhaust the limits on your auto or home policy, the umbrella would kick in over and above to prevent you from paying for that out of pocket. And then lastly, just a quick little tip. If you're buying a new car or putting a loan on a vehicle and you're not putting a lot down, do not buy gap insurance from the auto dealer or the lender, the auto, whoever's doing the loan for you. Do not put that on the loan, or you can add that to your insurance. It's much less expensive. And then we can remove that after a year or two once there's enough equity in that vehicle. So this is where we'll get into state law here. Wisconsin is a wrongful death lawsuit state. If heaven forbid we get into a motor vehicle accident and someone were to pass away from those injuries, the state awards $350,000 for anyone over the age of 18 and $500,000 for anyone under the age of 18. So that's before it goes to court. That's just what that's just what the state offers. So hypothetically speaking, let's just say we get into an accident with a parent and a minor and they both pass away from their injuries. That's $350,000 for the adult and $500,000 for the minor. So $850,000. It's not uncommon for us to see auto policies with $100,000 of coverage per person for liability limits. So in that situation, you're talking 100,000 per person, which would cover 200,000. You're still stuck with $650,000 that you have to cover out of your own pocket. And so again, it's about understanding these coverages before it's too late. The scary thing or the morbid thing that we have to think about is what happens if we get into an accident and someone's severely injured for the rest of their lives, right? And they hire Hupy and Abraham or Gruber or Nicolay, all these guys that are advertising all over the place. If they're seriously injured, they're going to sue you and they're probably going to get more than a few $100,000. So again, it's about protecting yourself, protecting your family, protecting your assets. Insurance is part of a comprehensive plan that includes, your will or an estate and your financial advisor and all this stuff. It doesn't pay to have all these assets if they're not protected, right? If someone can come in and wipe those out just based on a car accident. So again, it's about understanding this stuff before it's too late. Let's talk a little bit about life insurance. Just kind of a personal story. I had a brother that was diagnosed with cancer. He was 40 years old. They gave him 6 to 12 months to live. He made it 6 weeks. So I think life insurance is probably one of the least talked about things. People don't understand it. They don't plan ahead. The joke with life insurance is it's never cheaper than it is today, right? So the longer you wait, the more expensive it gets. We typically don't get more healthy as we get older, and age definitely dictates price. So the longer we wait, the more expensive it gets. Just some good tips. Why consider life insurance? You guys are the support system, whether it's you, your extended family, all of it, right? And so you're all chipping in to make sure that these children are taken care of, that your loved ones are supported and they have the assistance that they need. But what happens if you're not able to do that, right? So who's going to take care of that financial responsibility? And again, this is just to get you guys thinking, right? There's a lot of things that have to be covered, transportation, it's all written right here, right? Housing support, all of it. And so this is just to kind of get you thinking about why maybe you should, be considering this, right? Here's kind of just the financial reality of what's going on, right? Typical expenses. I guess I don't really need to read it to you, right? I mean, you can see the slide, right? I'm not one for just reading stuff off, but this is all stuff that factors into things that you need to consider should something happen, right? And you're unable to provide financially. Life insurance, again, it's a financial resource to replace the income, ongoing care and support, future housing needs, cover final expenses, which again, a lot of people don't think about. The typical funeral is 15 to 20,000 right now. So it can vary, but that's typically what they call that. That's typically what we're seeing. Again, I think this is just as big of a part as protecting your assets, as an estate plan, a will, working with your financial advisor. This is just a piece of this overall picture, right, to protect your family. I think it's a pretty important stat to see at the very bottom there. More than 53 million Americans provide unpaid care to a family member or friend, and many caregivers of individuals with disabilities continue in that role for decades. When parents are no longer able to provide care, the financial responsibility often shifts to siblings or other loved ones unless planning has been done in advance. Again, what is going to happen if you're not there? What's going to happen with that financial support? And this is just the harsh reality when it comes to life insurance. It is based on your health, right? And basically, you know, depending on what you're applying for, these carriers could be out millions of dollars, right? So they're assessing their risk. So I guess the harsh reality is people need to understand that you are going to be judged based on your health, right? Your age, your health, and basically family medical history. And some people may not be able to qualify for life insurance, and that's why it's important to try and get it when you're young and healthy, to try and give yourself the best price, to qualify for the best pricing, and hopefully the best option of qualifying, right? So there are some simplified issue depending on what you're looking for, especially if it's smaller amounts of life insurance. There are some simplified issue type policies that have usually it's 10 to 5 to 10 questions that, as long as you can answer no to those, usually it's kind of a pass through. Just be aware that those are going to be a standard issue policy. If you go to a fully underwritten policy, which means you're actually going to have someone, check your height, weight, blood pressure. Usually it's blood sample, urine sample. And then depending on what your medical history and the amount that you're applying for, they may pull some medical records. Again, that's usually when you start getting into the high hundreds of thousands to $1 million in coverage. But again, it's just something to be aware of. Um, Let's see, there are riders also to add children under the age of 18 onto policies so that you can have sort of a final expense type policy for those types of situations. Hopefully we never need to use those, but again, it's about just understanding what options are out there, what's available, and really understanding what you may want or need, right? I think sometimes that can vary, and sometimes that's based, just on financial capabilities as to how much you can afford, but finding something that works within your budget that hopefully meets your needs, right, is the most important thing. I think this is the toughest question to answer, right? Like, I think everyone's like, well, how much do I need? And so I use the acronym LIFE, actually, as odd as that may sound. LIFE stands for loans or debt, income, right? Final expenses and education. So you kind of, those are the things that you really need to take into account when we're considering life insurance. And loans and debt, that's pretty easy, to figure out. Income, that's tough, right? Because that's kind of our biggest asset is our income producing ability, right? So how long are we how long are we talking? How old are the kids, and how long do we want to be able to take care of them? Do we want to get them, through college? Do we want to get them to age 30, 40, whatever it is, right? Or indefinitely? I don't know. That's the question, right? So every situation is different, and that's a conversation that I think people really need to look deep within themselves and their situation to figure out what they need or what they think would work best for them. Um, Again, we can see, based on the bullet points here, that it's designed to reduce that financial stress, just knowing that something's there, right, to help with the expenses after we're gone. Um, and it's not, the goal is not to purchase the largest policy possible. I think a lot of agents will say, hey, let's get you as much as we possibly can. And that, I think that's, depending on what your needs are, right? I mean, I think it's a conversation to have, and maybe it's a mix of different types of policies to make sure that we're meeting those goals. But again, there's no one size fits all type situation for life insurance. Um, I guess the things to consider, you can see them there. Do other family members have the capability to help financially? What are the other resources that we have available to us that would be able to chip in and help out? Um, and then I think some people are like, well, I've got a policy through work, that should be good enough. We don't. You just never know what is going to happen. Employers are cutting all of these benefits all the time. They're making changes. Sometimes they're not transferable. So if you leave that position, you may not have access to that life insurance. I like to tell people, usually group life insurance through your employer, very inexpensive, great thing to add. I tell them kind of look at that as like a bonus, right? Um, if something were to happen and that pays out, that's great. That's just added funds that will be available, right? But I don't ever tell anyone to just bank on that because it could go away at any point in time. So just be careful with group offered life insurance. There's three main types of life insurance, and this is a very simplistic way to break it down. There's term insurance, which basically runs for a specific amount of time, and usually this is going to be the least expensive option, right? We're going to set up a 30-year term, or we have one carrier that's actually getting ready to launch a 40-year term policy, which 40 years, that's a very long period of time, right? So again, that's going to be your cheapest option. You're going to lock in the price, and basically it's going to be that same amount for that term, right? There's permanent insurance, which comes in a lot of different forms. Usually it's going to be called whole life or universal life or index universal or variable. And basically what that is that's more of a permanent insurance plan. It's going to be much more expensive. The reason that is so is you're overfunding the policy. You're basically throwing extra money into that policy, and then they're investing that money into the index funds or the stock market or whatever they're doing. And sometimes those policies will build cash value, which you can borrow against, which is great. But the problem is basically they invest that money so that they can take those funds later to actually pay the higher costs of insurance, right? Most permanent insurance policies pay out to age 121. I don't know of anyone that's lived longer than that. So those ones are pretty much guaranteed to pay out, right? And so that's why those are significantly more expensive, and sometimes a blend of the permanent insurance as well as term. Especially if we have young ones, we want to get them through a certain period of schooling, or we want to make sure they get to age, 25, 30, where they're able to maybe do a little bit more on their own. It's hard to say, right? Again, everyone's situation is different. But permanent insurance is great for creating an estate or leaving money behind regardless of when you may pass, right? Term insurance is great for, hey, we want to get to a specific period of time, and maybe there's debt that we want to cover, or maybe, like I said, we want to get them through whatever certain period in their life, and then it doesn't need to be such a large amount, right? And then there's final expense policies, which are designed pretty much like we talked about. The average funeral is 15 to 20,000. They're just designed to cover that, so families not worried about having to cover those expenses. Typically pretty inexpensive, pretty easy to qualify for, great policy to have, just to kind of relieve that stress from any other family members, so that they're not having to cover those. I think endorsements and things to look for in life insurance. I think the biggest thing is, if you're asking someone to write a policy for 30 or 40 years, you better make sure that that company's been around for a long time, that they're financially stable. I think price is important, but more so, you're going to want to make sure that that carrier is around in 30 or 40 years, so that the policy can pay out. I mentioned this before, child riders, to add children to your policy. There's limited amounts, but there's no underwriting. Basically, you can just add, it's almost like a final expense type policy that can be added onto your policy for little to no cost. And that's a great way to add some coverage for younger dependents. We have a carrier that offers some pretty unique coverages. One is the guaranteed insurability option. This is great for younger families, I think. When they're just getting started, they don't think they need a ton of insurance, but this policy can grow with them. Basically, it gives you an opportunity to buy additional insurance at the ages listed there. So whatever that is, 8 different times throughout your lifetime without going through any underwriting, which is a huge advantage. Like I said, my brother was diagnosed with cancer, basically in his late 30s, and that moved very quickly. And so we just never know what could happen. So I think giving yourself an opportunity to buy more coverage without having to qualify for it is a huge advantage. Long-term care rider is another one. A lot of carriers offer a long-term care rider, which basically means that if you're, unable to perform 2 of the 5 daily functions, right, that they will take a portion of the death benefit and pay long-term care insurance or long-term care coverage. That's a big advantage. And then usually most of them will have an accelerated death benefit rider on there also, where basically if you're diagnosed with something that's terminal, they'll give you, typically up to 50% of that death benefit, so that you can spend that while you're still alive to enjoy time with your family, whether that's taking trips or whatever you're doing, but to actually enjoy some of that while before you pass, I guess, is the easiest way to say it. My advice for people looking at insurance is lock in for longer terms than you think you need, and for more than you think you need. The reason I suggest that is underwriting is more critical right up front, right? They're going to pull more tests. They're going to look into more information up front. The nice thing is we can always reduce the amount of the benefit, or we can shorten the term, or let's just say, I don't know if I need it for 20 years or 30 years, or maybe when the 40 year comes out, maybe 40 years, right? But by locking in for 30 years when you maybe only need it for 20, you've locked that in where that price is not going to change for 30 years. And if at 22 years, you're like, you know what, I don't really need this anymore, you can stop paying. You can let the policy cancel. We can reduce the death benefit, right? And lower the premium, right? gives you a lot more flexibility in the long run rather than letting it lapse or having the term run out and then you need to reapply. And now you're 20 years older and that premium is going to be significantly higher. Because basically, once a term policy runs out, it turns into an annual renewable term. So basically, every year that you turn older, you just pay that appropriate premium for that age, right? And so it just gets insanely expensive the longer you go, right? So it's better to lock that rate in and just make sure that you're going to get that good rate, especially if you're young and healthy, right? So lock it in. Again, like I said, we can always make changes to go down, but we can't go up. We can't add length of time and we can't add more of a death benefit. I guess closing thoughts on on things here. Again, my biggest, I guess, takeaway for you guys is insurance is not one size fits all, right? Like there's so many different variables. Every family is different, every situation is different. I don't care if we're talking about home, auto, umbrella, or life insurance. Insurance is a discussion to be had with your agent, and you should understand what you're buying before it's too late, right? A lot of times we don't find out how bad the coverage is, or we don't find out that things aren't covered until it's too late, and then that could be thousands of dollars out of your pocket, right? Um, I think it's really important to, bring your insurance agent into your overall plan, with your, like I said, your estate planning attorney, your financial advisor, all that stuff. It's kind of a team that's helping you protect your assets and your family. Life insurance isn't the entire plan, right? But it's an important part of the plan. And the only way for you guys to really understand is ask questions, right? Work with an agent that's asking questions, work with professionals that have been around, are going to probe, ask the probing questions to get you thinking, right? Like, again, if you walk into an agent's office and they sell you the same thing that they've sold to the last 20 people that have been in there, they're probably not doing a very good job and they're probably not explaining things very well. Everyone's walking out of there with the same coverage, whether they need it or not. So I think that's important. Um, I think the last one, coverage availability, policy types, eligibility vary based on age, health, diagnosis, and other underwriting factors. I guess that's, the other point is whether it doesn't matter what line of insurance we're talking about, we as agents have to deal with certain underwriting guidelines and so do you guys. And so that's why we ask a lot of questions. It's impossible for us to properly represent you and convey that to our insurance carriers without asking those questions. So we wouldn't be doing our job if we didn't ask a lot of questions because we wouldn't understand your situation. So just make sure that you're educating yourself as much as possible and make sure that your agents are hopefully doing their best to help you. And then I'll just open it up for questions.
Yeah, thank you, Jason. Part of the reason that I wanted and invited Jason to talk about this is, first of all, he's very reputable in the industry. He does ask a lot of questions, and it's not about selling to people. And so I've learned a lot, although I am an insured or a licensed insurance agent myself. There's a lot of things that I didn't consider with our daughter who was in a wheelchair. For example, one of the things I didn't think about was we always took the mindset that her BiPAP or which is durable medical equipment or her wheelchair or something would be automatically replaced if something happened. Well, that's not the case at all. I started digging into things and found out that, let's just say we have her BiPAP and we're traveling and it doesn't cover lost, stolen, or broken if it's under your homeowner's policy or your renter's policy. So you have to have something like an endorsement. So these are the conversations that families should be having with their agent. I would say the agent should be having that with you because we don't think about those things. However, that's not questions that I was ever asked. So this got me thinking outside the typical box. The other thing too that unfortunately in our case, our daughter was uninsurable at birth. That is not the case for everybody just because there is a diagnosis. And so I always encourage families to shop around. You don't have to go to one agent. You can go to several agents. There are so many carriers out there, and ask the questions and look into life insurance. No matter what the diagnosis is, it doesn't, I don't want to say that you are insurable or someone is, but in a lot of cases, parents automatically assume that just because there's a diagnosis that they're uninsurable for life insurance, which is not always the case. So in our case, Morgan was, however, uninsurable. But one thing that really struck me hard was I had been working with financial advisors for years. Nobody ever said to us that we could use an ABLE account, for example, as a life insurance policy, so to speak, in that we could put money in there. Morgan could put money in there. It wouldn't count against her for her SSI. And in the event that she passed away, we could have used some of that money or that money to offset the funeral expenses. Again, something that I don't think parents know is even an option. So we're not asking, and it's not because it's more of a we don't know what we don't know until we need to know it. So that was one of the reasons why I thought it was really important to start having these conversations, that they are bigger. And Jason's great at asking questions. But it's also up to us as parents to be bringing some information forthright when we are talking to insurance agents that they may not know about. So does anybody tonight have any questions?
Hey, Janice, could I just say something quick?
Absolutely.
You brought up a really good point. Like, we do ask a lot of questions, but we don't ask a lot of like family, geared questions. So a lot of times we're not asking about, is there someone with special needs in the house? Because, that can get a little sensitive, right? So I would advise, if you have situations like this, like, I would definitely bring it up to your agent, right? And say, hey, what would the scenario be if this happened? Or how is this covered? Or how does our carrier protect us in these circumstances, right? So again, we ask a lot of questions. Like, one of our questions is, do we need to schedule any specific items? But we're not getting into, is there medical equipment that we need to schedule, or like, we're not asking those specific questions. So again, for those of you that are listening to this or on the call or will watch this, right, like, make sure that you're asking those questions to whoever your agent is. So
Absolutely. All right. Well, with that being said, does anybody have any questions? I'll open it up one more time. If there are no questions, thank you, Jason, for your time. As I mentioned earlier, we will send the link out to everybody that will be on YouTube and on our website. So that way, if you want to go back and review anything at a later date, you're more than welcome. We also have a library of other webinars to watch. They are all free resources. We highly encourage you to take a look at things. If there is something that you don't know about that you want to know about, when we send out the survey, please take the time to fill that out so that I can continue to schedule webinars for topics that are important to parents and caregivers alike. And like I said, if anybody ever needs to reach out to myself, feel free to do so. Our website is Morgans with an S, cc.org. You can also reach out to your own agent, or Jason's always great about taking conversations with people to make sure that they're covered correctly. Again, thank you very much for your time tonight, Jason, and have a wonderful evening.
thanks, Janice. Enjoy your time up north.
All right, take care.
Yep.